Hello, Facebook. Oh, now you can see my thing on here. Let's see if I should go here. Hello. Okay, this is actually kind of funny. I actually can see who's watching right now. I don't know why. Hello, who's there? Okay. Never mind. Okay. For some reason, I cannot see who is watching right now. That is really weird. Hi, everyone. I'm still in the office. So today is November 8th, 2018. I want to share one of my big win. Hi, boss. I want to share one of my big win for actually one of my clients that sold their house back in July. So this is about the foreign seller Firpta. So what? Well, if you're a real estate agent, you know what the Firpta is. It's IRPTA, which stands for. It's basically is for Seller's Affidavit of Nonforeign Status. So Firpta. So this is basically a form that, for real estate transactions, we'll fill it out. It tells you the buyer who the sellers are and their tax status, and if they are a foreigner or if they are they are U.S. citizen, or what their tax status is. A lot of times the buyer will get a qualified substitution instead of the Firpta, but this form is actually very important. So today I want to talk about. How I help my client. I have a foreign client. They purchased their home back in 2008. Okay, so they purchased their home back in 2008, and then they just sold it this year, and that house been a rental property for them for almost the past, I want to say 6 to 8 years. So as the market appreciates, they decide to sell this year. But one thing a lot of foreign seller that encounter, one of their biggest concern is the capital gain tax. Because per the IRS guideline right now, if you're a foreigner selling real estate here in in United States, particularly I'm talking about California right now. The IRS guideline right now is that the withholding is actually 15%, 15% from the sales price. It's not the actual gain, it's actually the sales price. So, sorry, I'm trying to fix my hair again. I can't really see. So, hi Van. So the foreign sellers have to pay, basically the withholding is 15% of the sales price. It's not the actual gain, it's the sales price, which is a lot. For $1 million home, you're looking at about $150,000. So in this particular case, the house was sold at $610,000. So the withholding actually is about $91,000 just for the California alone. Hi Martha. So, so before we list a house, and I've been doing research actually on this topic for quite a while, for several years, because I have a lot of clients that's out of the country, so this is really going to affect them. So I've been doing this research on this topic actually for quite a while right now, and this and I talk to a lot of people. a lot of feedback I get from escrow company or IRS agents or tax professional is that they don't think it's something that even worth trying, because it does take time. The process to get it done is about 90 days and plus, depending on how busy IRS is, and there definitely is a cost to do it too. But I think there's definitely an advantage for basically applying for the exemption certificate. So this form that saved them $91,000 is called the withholding certificate. Okay, so I'll go into that a little bit later. Hi Viri. So this is what I want to talk about, because I feel that a lot of people, whether you are in real estate or you are in escrow or you are a CPA or tax person, I feel that a lot of people, when I was asking them about the questions, a lot of people are not very on top with the current guideline and how to proceed, with the process. I have to say the process, in a way, it's a lot simpler than I anticipated. My client didn't get a lot of resistance from the IRS. We didn't get any further inquiries on their taxes or anything like that. But I also have a very, very good team. I have to say this transaction in particular, my escrow officer was awesome. Shelly was awesome. The tax people that help us also, they are very responsive. They are very knowledgeable too. The buyers they also need to be cooperate in this process as well, because they are actually the withholding party. So they actually need to provide their social security number and their date of birth as well. And I did a lot of research online. I talked to a couple different CPAs, tax people, a couple escrow professionals as well for their advice. And that's something I really encourage everyone to do too. If you are a foreigner that owns real estate here in the United States, you really have to know, because when you purchase a property, the process is almost the same as a U.S. citizen. But when you sell the property, the tax requirement, the withholding requirement is very, very different. So especially in California, because we do have to withhold state tax as well. So I'll give that scenario again. So this client purchased a home in 2008. So they owned the property for 10 years until summer this year. They purchased a home about $550,000. Sold the house about $610,000. Woohoo! Funny thing is, actually we list at $595, sold it for $610. So it's great. So they make money, which is great. But one thing is that the capital gain, because when we were talking to a lot of people, and they're saying that there's really no way you have to withhold the tax and just wait till you file your tax next year. So what would happen if we didn't go with the withholding certificate? What would happen would be that basically escrow had to take out that 15% of tax, which is about $91,000, and send it to IRS, and IRS will hold on to the money until next year. The IRS will hold on to the money until next year when they can file their tax, so which will be after January 1st. So my client would then have to file their income tax for 2018 and then to ask for that $91,000 back. But we all know that IRS is probably the busiest during January to April. So for them to get their money back can take another maybe 6-7 months, just because they are foreigners and everything. So we're closing July, and they'll probably get their money back next year, maybe June or July. Then if you look at the timeline, then that $91,000 is actually sitting at IRS for almost 12 months, which is a really long time. And they don't pay you interest. Keep in mind, they don't pay you interest either. Okay, so what we did is actually, right before escrow close, because I know a lot of people say that just do it after escrow close. I don't recommend that. Actually, I would recommend to get it done as soon as you open escrow. You cannot send it in without a closing statement from escrow, because escrow also need to provide a closing statement to the CPA. So you cannot do that. But I recommend to start the process before your escrow even close, just because it does take about 90 days to get the certificate approved or denied, or they'll give you some feedback. That process takes about 90 days. And what we did is, so before the escrow closed, then I start to coordinate between the buyer and the seller and the CPA to make sure we are all on the same page, and I let the buyer know that the seller does have the intent to file for a withholding certificate because they are foreigner. Because you don't want to wait till last minute, because again, the buyer does have to sign, and the buyer does have to provide their social security number as well. So if the buyers are not cooperating, you are going to run into problems. You don't want to wait till escrow close and chase down the buyer to ask them, oh, you need to sign this for me, because I'm sorry, they get the keys and they'll be like, why do I need to do this? So you want to make sure you prepare the buyers. You have to prepare everyone in this transaction to make sure that this is what to be expected before we close the escrow. So we have to get the information from the buyer as well. And I want to emphasize too, I did not file the paperwork myself. We did use a CPA. So they are the one that prepared the forms and everything, but me as a real estate professional, my job is to set the expectations and let everyone knows what's going on and what they need to do as far as getting this filed. So basically the seller has to file a form which is 8288B. I think Asian people like this number because we like 8s. It's A2AA-B. So that's the form that needs to be filed to the IRS, and it is called the Application for Withholding Certificate for Dispositions by foreign persons of U.S. real property interest. Okay, I'll go over that again. So it's Form A2AA-B. It's called the Application for Withholding Certificate for Dispositions by Foreign Person of U.S. real property interest. Okay, so basically it's going to ask you who the seller is, what's their mailing address. So you want to make sure they still have a mailing address. You have to have a mailing address. It's going to ask you who the buyers are, what's the buyer's address. It's going to ask you the buyer's social security number. Okay, it's going to ask you for where the certificate should be sending to. Okay, it's going to ask you for that. It's going to ask you how much the transfer price is, which is basically the sales amount. So it's going to ask you for that too. And then it's going to ask you again which property is the one that the seller is disposing. Basically the property that I was selling. And then it's going to ask you, is there any U.S. income tax filed for this property? It's going to ask you a couple other questions too. Okay, so you want to make sure this form is filled out completely correctly. You want to make sure that you consult with the tax person as well before you send this form in. This is very, very important. And they also need the original from what I was told. So because my seller is overseas, so they actually had to mail this in, and then the tax person send it to IRS. So they had to have the original. So that's something too. You want to, sorry, my phone is actually running low on battery. So you want to make sure this is something that you have ready for your client, and then when they sign it, they have to send it back, and then because they need the original to send this in. Okay, so once you send this in, it takes about 90 days. So we send it in at the end of July, and we just got our withholding certificate actually on Monday. So it does take about a little bit more than 90 days for us. It does take time. And one comes back, so basically the FIRPTA, this is what you have to give to the buyer, okay? You fill out the 8288B, okay? And then 90 days later, so basically during this time, the money is actually holding at escrow. So the escrow company still holds on to this money. They don't disperse it to the seller. They don't give it to IRS. So the escrow company, because basically I had to give this to the escrow company too, to let them know that we are applying for withholding certificate. We are waiting for the withholding certificate, so that way they have instructions. So they are waiting for further instructions from the IRS. So the IRS will tell them either it is approved, denied, or they want to withhold a different amount. Okay, so that's the 3-case scenario. Either it's approved, denied, or they want to withhold a different amount. Okay, so anyone has any questions so far? Okay, so before I get into the final results, again, if you are not familiar with how the how foreigners are, how they sell properties in here in U.S., it's different than how a U.S. citizen selling their property here, because IRS requirement right now is for federal is 15% withholding of the sales price, not the actual gains. The sales price, it used to be 10%. It went up to 15%, I think, in 2016. One thing outside this topic too is for foreign person, IRS actually doesn't like to give out your tax ID anymore, because it used to be very easy to get a tax ID. It's not as easy right now. So in order to get a tax ID, you have to actually file tax in order for them to give you a tax ID. And to do this too, you actually need to have a tax ID as well. So if you don't have a tax ID, the process can take longer, just because you have to actually first, you have to actually do both at the same time. You have to file for a tax ID and do this at the same time. So, so the process can take longer if you don't have a tax ID. So it's also just something to keep in mind too. If you're dealing with a foreign seller, you want to make sure you ask them if they have a tax ID, have they filed tax here in U.S. before, or just their history with that particular property. Okay. So the good news is so this takes about 90 days. So this paperwork basically saved my client about a year worth of time, and also saved them about $91,000. So I think with the holiday coming up, that's a great news. It's a great holiday gift. So basically what it says is that, so IRS received our request for the withholding certificate. Okay, so they say that they receive our application for 8288B, application for withholding certificate for disposition by foreign person of the U.S. Real property interest, which is this form again. Okay, this form. Okay, for the property they are selling, and then it tells you who the seller is, who the buyers are. In this case, I'm not going to say any names because, hi Vicky, just because it's a real case. So, and it says that, I'm just going to read from here. It says that this letter is your approved withholding certificate and your legal notification that the required withholding amount for $610,000 tax liability for the disposition of the U.S. real estate property, U.S. real property interest described above will exceed their maximum tax liability. Therefore, we reduce the required withholding to $0. Okay, the key word there is $0. $0. $0. Okay, I want to read that again because I'm really happy for that. Because again, there are going to be most likely three scenarios. Okay, it's either going to be they approve it, they deny it, or they're going to require a different amount. Because a lot of times too, from my research, it's depending on your actual gain. Because if you do have some gain and you cannot prove that you don't have any gain, then they might require a reduced withholding amount, not the whole $91,000. They might say that they are going to withhold $20,000, $30,000, and then the escrow is going to disperse funds to IRS based on that. Okay, so this is important. So I'm going to read that again. This letter is your approved withholding certificate in your legal notification that the required withholding amount of $610,000 tax liability for the disposition of the U.S. real property interest described above will exceed their maximum tax liability. Therefore, we reduce the required withholding to $0. Woohoo! We also determined that the substitution of the reduction withholding amount will not jeopardize the collection of the tax imposed on any gain reported from the disposition of the U.S. real property interest. Okay, so basically it says that my client doesn't have to give the $91,000 right now. That still means that they have to file their tax, though. It doesn't mean that they don't have to file their tax for this year. They still have to file their tax. How they file their tax, basically, everyone's case is different, so they still have to file their tax, and their tax person, I actually just email out the final HUD revised again after all the disbursement to their tax person, so they will file their tax for them. Okay, but they are getting their $91,000 right now instead of waiting until next year after they get their refund. Okay, so that's why I say save them about almost 1 year worth of time. So that they actually get the money earlier than next year. So it also says on here, it's very important. It says that as a reminder, this withholding certificate doesn't eliminate the requirement to file a U.S. income tax return to report this transaction. So very important. Just because you have a withholding certificate doesn't mean that you do not need to file tax. That still means you still need to file tax. You just get your money back first. So this, I have to say, it's a very good practical experience for me because I've done it, several times, but I've never had to go through the whole process because I have to say a lot of people I talked to before, they don't want to get involved in this just because it's a lengthy process and it does cost money. I believe it costs about $500 to get all the forms and tax things done. So that's something that the seller does have to pay. It does take some effort to coordinate everyone, just because you have the buyers and sellers involved, the other agent and us, and escrow, and so it does take some time to coordinate it. So a lot of people I talk to, they don't think it's really worth the time just because it's a lot of efforts. Yeah, it's a lot of efforts to get it done. But I'm really glad that my client chose to go this route. This is actually what I recommended as well. Just because in my opinion, I don't think there's a reason why they should just give IRS $91,000 when they really don't owe that much. So I think it only makes sense that they get their money first and then they file their tax. If they owe, they can pay. Most likely they don't, but but if they do owe, then pay. So I think it really makes sense this way. If you guys or anyone that's watching, I'm actually going to do a more organized YouTube video on this one, just because when I was doing my research, I really didn't see many resources out there that's educating real estate professionals and consumers about how the process works. There are companies, they'll charge you. I was doing my research. There are companies, they will charge you like $3,000-$4,000 just to do what I just described to you. Okay, and this is something that you really can get a CPA to just file the forms for you if you know what you're doing, and for like a couple $100. Yeah, but there are companies that basically will just do what I just described you guys to do, and they'll charge you $4,000-$5,000. And again, the results might be different for for everyone, just because everyone's tax liability is different, because it also depends on you again, if you have any depreciation and all those different things that takes into factor. So there's no guarantee that they will get all their someone can get all their money back. So that's something too. If you're a consumer out there, if you're a real estate professional, you want to make sure that you set the expectations up front. But if you have a basic knowledge of accounting, how it works, or it's really basic math, because when you fill out the 593, it can pretty much figure out on there, if they owe or they don't owe. So that's another topic to the 593. So it's something that I find very interesting, because a lot of people don't know how it works, and they don't want to talk about it, because like I said, I've been researching this topic for several years right now, and most of the feedback I get from people is that it's very complicated. You can't get it done. It's a waste of time. And knowing me, I don't give up. Even though people tell me no, I don't give up. So I'm really glad that we got this done. Because I think I think this is the right way. That in a way, my job is to give my client my best advice, and I really think it was the right way for them. Like I said, I cannot guarantee this is the right way for everyone, because you really have to look at your tax liability. You have to do your own research. The clients do. You have to advise them where to look. But this does save them $91,000 and a lot of heartache and headache. Sorry, I can't really talk right now. I've been up since like 4 o'clock this morning. So this really saves them a lot of heartache and headache. So I think it's important. And again, if anyone has any questions, I would like to, I'm here to help you. Canada. So this one is from Canada. Ankin got this for me. I'm sorry, all of a sudden I forgot. Yeah, if you have any questions, if you're ever dealing with a foreign client that you need help with, to guide you through the process, or just give you kind of like a timeline to to go by, let me know. I mean, I have to say, I think this is very easy. I have to say this is a lot easier than I anticipated. And then just kind of like 1031 exchange. I was just talking to someone the other day. They are so scared to do a 1031 exchange because they don't know how it's done. 1031 exchange, I have to say, it's one of the easiest thing like ever out there. Yeah, if you know how it's done, it's really not that hard. But I was actually talking to a realtor the other day, and they actually refer out the business to someone else just because they don't know how to do a 1031 exchange. It's not hard at all. Just like this, you have to just educate yourself and your client, and you really can save them a lot of money. We've done two 1031 or 3 1031 exchange this year so far. Clients are saving anywhere from $20,000-$30,000 in taxes. They get a bigger, nicer property, and they are very happy. It's a good investment. Because I think market is definitely changing right now. But I have a lot of investors. Your needs change. Your needs change. You have you bought a house before, and now you appreciate. I have clients that want to exchange into multiple properties. They want to go out of state. So it just, you have to educate yourself. But that's outside the topic here. Hi, Kathy. So I just want to go over really fast again what I talk about today. So I help my client to file, or guide them through the process to file their application for withholding certificate. Application for withholding certificate for dispositions by foreign persons of U.S. real estate property interest, which is the IRS Form 8288-B, A2A8-B. So this is the form that saved them $91,000 and a lot of heartache and headache. So this is very important, and the end result is that we got a withholding certificate, which takes about 90 days. We did get a withholding certificate that shows that their tax liability is 0. So they get their $91,000 today instead of next year after they file their tax. Okay? So I guess no one has any questions. So I'm going to log out. It is 6:22. I am going to go home and reach out to me if you have any questions, and I look forward to talk to you guys again soon. Have a good day. Actually, have a good evening.